Alright guys, my name is Shervin. Welcome to my channel. In this video, we're going to talk about the best index funds that you can invest into in order to rapidly grow your wealth. Now, the great thing about index funds is that they are diversified investments that track how the market performs as a whole. And even though in the short term anything can happen, in the long term we know that the market always goes up. So for all you investors out there, particularly for those of you who are on the younger side, maybe in your 20s or 30s, this is a great opportunity as you can invest into these index funds for the long term and experience tremendous growth in building your wealth because of the fact that the markets always go up in the long term. But of course, there are a lot of different options out there, and it could be a little tough deciding which index fund to invest into and which one to not. But don't worry, because by the end of this video, you're going to know exactly which 3 index funds are the best ones to invest into, why they are the best, what they hold, how much they return on your investments, and how you want to go about investing into them. And all that I ask for in return is that if you haven't subscribed to the channel yet, make sure to smash that subscribe button down below and join the community. I make new videos on investing, banking, personal finance, all that stuff all the time. And if you want to see more videos like that, then make sure to subscribe so they all show up in your subscription box. Also, if you're feeling extra generous today, maybe drop a like button down below as well for the YouTube algorithm. Alright, but with that out of the way, let's talk about the third best index fund that you can invest into today, and that is VTSAX. Now, VTSAX is provided by Vanguard, which is one of the most reliable financial companies when it comes to index funds, and it tracks the entire US market. That means that it covers over 3,500 different stocks within its holdings, which is an insanely high number for an index fund. Now, most index funds cover the S&P 500, which covers the top 500 companies in the US market, but obviously this one covering 3,500 covers a whole lot more than just the top 500. Now, that said, there's really no telling which one is going to outperform which. Sometimes the S&P 500 is going to outperform the market as a whole, but some other times the market as a whole might outperform the S&P 500. Which is why it's best to just invest into an index fund from each of them, and this way you have all your bases covered. That's why VTSAX is a great option to have in your portfolio. Now, this stock has grown over 3.5 times in the past 10 years, which means that on average, it's grown about 14% a year. Now, of course, this doesn't mean that every single year it went up 14%. Some years it might have gone up even more, some years it might have gone up a little bit less, some years it might have even gone down. But at the end of the 10 years, on average, it has gone up 14% a year. Now, this ETF also has a 0.04% expense ratio, which means that for every $100 you have invested into this index fund, you're going to have to pay 4 cents as an expense fee every single year, which is pretty negligible. Next up in the second place, we have VOO, also known as VOO. Now, this index fund is also provided by Vanguard, but this one tracks the S&P 500 instead of tracking the entire US market. Now, as I mentioned before, you want to invest into one ETF that covers the entire US market and another one that covers the S&P 500. So with VOO and VTSAX, you can invest in both of them. Now, if you look at the past 10 years, VOO slightly outperformed VTSAX as it grew 4 times, which averages out to about 15% of growth per year. Now, even though VOO outperformed VTSAX for the past 10 years, there's really no telling which one is going to outperform the other one for the next 10 years. So really, you just want to invest in both of them and hold both of them no matter what happens. But since the VOO covers less stocks and needs less management compared to VTSAX, it also has a slightly lower expense ratio with only 0.03% per year. That means that if you have $100 invested into VOO, every single year you have to pay 3 cents as the expense fee, which again is pretty negligible. It's not really that much money. Now, on to our number 1 index fund, the best index fund that you can invest into. And this one is called Fidelity Zero Large Cap Index, or FNILX for short. Now, FNILX also tracks all the stocks within the S&P 500 without actually tracking the S&P 500. Let me explain. You see, anytime an index fund uses the name S&P 500, they have to pay a licensing fee for using that term in their advertising, in their descriptions, or in their performance reports. So in order to keep the costs down for an investor such as yourself, they have done away with the S&P 500 name, even though they track all the same holdings. Now, this ETF only started a little bit over 3 years ago, and in that time period, it has grown about 1.7 times, which averages out to about 20% growth per year. But the single best thing about this index fund is that the expense ratio is 0%. That means that no matter how much you have invested into this index fund, you don't have to pay anything as an expense fee. Again, this is due to the fact that they don't use the S&P 500 name and they try to keep the costs down as much as possible. Alright, so those are the 3 best index funds that you can invest into. But the question is, where should you be investing into them? Now, given the fact that these are all equity investments, meaning that you don't have to pay any taxes on any of your gains until the moment you sell your shares, you want to keep all of these investments outside of your government registered tax sheltered accounts. This is because you want to keep all of those tax sheltered accounts for other investments that have dividends that require you to pay taxes on every single dividend that you receive. Alright, so that's about it for this video. Hopefully you guys enjoyed that. Now, as always, if you have any questions about any of the stuff that we talked about here today, feel free to let me know in the comment section down below. I always respond to every single question that comes in. And with all that said, thank you guys so much for watching. And as always, I will see you in the next video. Cheers.